Basic features of a life insurance plan are pretty simple. Obviously, you have an insured, the person that you are paying the premiums on, that ultimately will pass a death benefit along to their heirs. But I think what's more important is that we talk about some of the more specific features, some of the features that you could actually use while you're living and still later pass a death benefit on to your heirs. So first and foremost, the cash accumulation inside your life insurance, it grows every single year, slow, steady, pretty predictable, not subject to market volatility, and you do not receive a 1099 every year on the gain. The other great benefit from a tax perspective is that you can access some of that cash accumulation later on in retirement if you need it, and that income flies completely off the radar screen of the IRS. So you're actually able to supplement your retirement income. And remember, it's not subject to market volatility. So you're able to access it even when markets are down, and you don't pay any penalty or lose any opportunity costs for accessing the cash accumulation. Then you have the flexibility of paying it back or not, depending on your individual preference. Another basic benefit is liquidity. A lot of our clients need access to their cash accumulation or need access to their dollars. For example, they have an opportunity pop up where they could have an investment opportunity, they could flip a house. They're able to access their cash accumulation in their policy at any time. There's no penalty, there's no tax to access your cash accumulation. So for example, if you had a 401k and you wanted to access the cash, A, the plan may limit what you can access inside your plan, but B, if you go to cash it out, then obviously you would have not only the tax due on that, but you'd also pay a penalty. Using a life insurance product, you don't have any kind of tax or liability or pay any penalty toward accessing that cash accumulation. Another great benefit that I think is often forgotten or underutilized is the access to long-term care benefit. So a lot of our clients are seeing their parents age and their parents needing access to long-term care benefits, and they're seeing how expensive that benefit or that liability could be. So they're asking us if they should be buying standalone long-term care policies. The issue with long-term care is that A, it's really expensive, B, it's hard to get, and C, there are very few carriers even offering the product anymore. If you die peacefully in your sleep after you've paid for long-term care for 15 or 20 years, that benefit simply goes away. However, we can structure policies where you are able to actually tie your long-term care benefits into your life insurance policy. If you pass away peacefully in your sleep, that benefit still passes as a death benefit to your heirs completely tax-free. But if you need the coverage while you're living, it allows you to accelerate some of that death benefit during your living years and use it toward long-term care expenses. Again, going back to completely tax-free. Another basic feature of life insurance is that it's a completely non-correlated asset to the market. So when the market has volatile years, it's a great place where you can go and access cash accumulation during your living years, where you can use the money and it's not subject to market volatility.